Wrap the month, December 2023. We made it. Miraculously enough, we ended up with a good year. Go figure. That's what the 11 charts are going to show us. How the heck did we end 2023 positively? Let's go. Chart 101. How the markets and our funds did in the month of December. As you probably know from looking at our statements, we had another good month in December. November and December proved to kind of define the whole year. Without great months in November, December, we would have had a bad year or a down year. Bad year compared, kind of how you want to think of a bad year, but we wouldn't have had as well of a year as we had in 2023 without November and December. So S&P 500 up 4.59% in the month of December. NASDAQ was up 5.52% in the month of December. Small caps were up 11.83%, and the bond market was up 3.5%. Now let's jump into our individual holdings. S&P 500 cap weight was up 4.59%. Equal weight starting to do what equal weight does when small caps and mid caps have good months. They outperform cap weight. So equal weight was up 6.85%. Vanguard dividend appreciation was up 4.11. Schwab small caps up 11.83. International stocks 5.07. Schwab international small cap up 7%. Vanguard short-term bond fund 1.62% in the month of December. Total bond market up 3.5% in December, and our international bond ETF was up 3.21% in December. Now, chart 102 and 103 are going to be exactly the same because 12 months looking back and year to date are kind of the same when you're looking at 12/31 numbers. So chart 102 and 103 are going to be the same for the year. NASDAQ was up 43%. S&P 500 was up 26%. Small caps 18.4%, and bonds, as you could see, for a lot of the year, they were down. They were negative, but November and December made it 5.65%. S&P 500 cap weight, 26%. Equal weight S&P 500 really underperformed, 13.7%. Vanguard dividend appreciation was up 14.5%. Schwab U.S. small cap up 18.46%. Vanguard international stocks, 15.86%. Schwab international small caps, 14.36%. Vanguard short-term bonds, 4.9%. Vanguard total bond market up 5.65%. And our international bond fund, 8.77%. We'll take that every year. So that's how we did for the whole year. Believe it or not, that's why when the markets and noise and everything that's going on, you just sometimes have to I don't want to say put your head in the sand, but yeah, put your head in the sand because it's just noise. At the end of the day, if you have good investing principles, good strategies, good funds, low cost, and you are sticking to what your plan is, what your money is there to do for you, more often than not, you will be rewarded for it. And we were this year. Let's look at market breadth. Yeah, we are in a positive trend. The 50-day moving average stocks are trading higher than the blue line. The 50-day, the S&P 500 is trading higher than the 200-day, as we could see right here. It is in a bullish trend, to say the least. Relative strength is a little bit overbought at 70%. The percentage of stocks in the S&P 500 above their 50-day moving average, again, the 50-day moving average trading above it is a bullish indicator, is at 90%. Yes, 90%. The percentage above the 200-day, which is a longer-term bullish indicator, is 78%. That's on the S&P 500. NASDAQ is not as dramatic because, as we've discussed before, the NASDAQ has been driven more by fewer companies having amazing years. But still, again, the price movement here, price is trading above the 50-day and the 200-day, signaling short-term and long-term bullish indicators. Relative strength, which would make sense, is not as strong as the S&P because less stocks are above their moving averages, as we'll see. So that's at 68%, which is still a very good relative strength indicator. The percentage of stocks above the 200-day moving average is 50.39%. So as we've discussed, it's not as strong. The breadth of the market is not as strong on the NASDAQ compared to the S&P 500. That is no surprise. That's how it's been all year. Now let's look at growth versus value. How did growth perform versus value in the month of December? Value outperformed growth by 1.19%. As we could see here, the Russell 1000 value was up 5.57%. But again, as we talk about outperforming is relative. So they both had great months. Russell 1000 value was up 5.57. Russell 1000 growth was up 4.32. So while they were both up, value outperformed growth for the month of December. Now let's look at offense versus defense. As we've discussed before, consumer discretionary versus consumer staples. Discretionary tends to be things that people do not need, and in bad economic times, they do not perform as well. Staples are things that people tend to have, like toiletries, toilet paper, goods, and things of that sort. So typically in different market environments, discretionary will outperform staples, or the staples will outperform discretionary. And it does give us an indicator of kind of how the market is thinking and what's going on. As we can imagine, for the month of December, discretionary has outperformed staples by 3.33%, discretionary up 6.16% versus staples up 2.74%. The University of Michigan Consumer Sentiment Chart. As we can imagine, with how well November and December finished up, so 61% the month prior felt confident about the market, as opposed to when we look at the end of December, about 69%, which makes sense. Better markets makes people feel better. Let's look at yields, treasuries, the inverted yield curve. The inverted yield curve is not as inverted as it was a few months ago, but it is still inverted. As you can see here, when the green line trades below the blue line here, which is 0, that means we have an inverted yield curve. So we have the 10-year treasury, which represents the green line, yielding 4.09, and the 2-year treasury representing 4.36. So it's inverted by about 34 bips, 34 basis points. So that's what we're looking at here. Again, in normal environments, normal interest rate environments, the chart that we looked at right here, for this to be trading above the blue like it normally is, you would need to see the green line above the red line, because that would mean that the 2-year treasury is yielding less than the 10-year treasury, and that's how things normally go. When we're looking at here, the 10-year treasury versus the 3-month treasury, we're still inverted. We have the 3-month treasury yielding 5.47%, 10-year treasury yielding 4.82. So yields have come down a little bit. They're not as high as they used to be, but they're still very high. We're still loading up on treasuries, short-term treasuries where we think it makes sense. We made it. December 2023, wrapped the month. The 11 charts just showed us how we ended up positively in a good year. Go figure. Let's see how 2024 works out for us. Till next time, see ya.